Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Monday, June the 7th, 2010, and today we're going to show you how to call the bottom in the market. Check this out. Okay, before we begin, I've got to take a moment to tell everybody thank you. Thank you, thank you, thank you. All of our subscribers on YouTube, you guys have really been showing your support. We need that support. And I think it was last week, Tuesday or Wednesday, I can't remember. We had 500 subscribers on our YouTube channel. We now have over 800. That is because you guys are sharing our videos online, you're referring your friends, and you're all taking the time to subscribe to our YouTube channel. That means a lot to us. If you haven't done that already, just go there, click the subscribe button, boom, it's done. Everybody's happy, okay? That's awesome. We need that support to keep this service free. As I've told you before, it costs me thousands of dollars every month to provide this service, and it can only go on so long without us growing. We have been growing. I want to continue doing that. If that happens, then sooner or later, the ad revenue that we get from our website at perfectstockalert.com will actually start to cover the total cost of this service, and I don't have to worry about it no more, okay? That'd be awesome. So let's keep doing that. Now let's look at some charts. There are two ways to call a bottom in a market. You can do it with fundamentals or technicals. At perfectstockalert.com, we use both fundamentals and technicals. That's kind of why we're as successful as we are. It adds, stacks more of the odds in our favor. And from a technical perspective, let's start with that. You want to look at, there's two items that are first and second, and they're so closely related that I consider them, I wouldn't consider one without the other. So I would say we have two number one, indicators you have to monitor constantly, and that is price and volume. Back here, let me get the right tools out. Back here, we saw this sell-off, and we told you this bounce right here was not legit. You did not want to reverse and go long. How did we know that? We told you at that time because we didn't have the hammer signal. This is a nice hammer reversal, and it was supported by strong volume, and that told us this was a good buy opportunity, and in fact, it was. Back here, you had a major sell-off and no hammer formation, not a good one, and no volume. So with no hammer and no volume, even if you had a hammer with no volume, you would just ignore it. And at that point, I don't have to look at any other indicator, plain and simple. When you look at price, like today, I could just look at this price, this candlestick right here. This is a continuation signal on the downside. It's not a hammer, so I don't have to look at anything else. I know to stay short, keep shorting, plain and simple. I keep saying plain and simple. I got to stop doing that. Anyway, this is not a hammer formation, so I wouldn't even consider my, uh, covering here or anything else. And because I can look at price and see there's no hammer here, and because I can look at volume and see there's no buy pressure that's superseding the massive sell pressure that we have, I know that this is not the bottom. And because of that, I know not to look at any other indicator. A lot of guys are getting fooled by that. Check this out. What they're doing is they're looking at either the slow stotch, which is down here near the 20 line, and they're saying, well, that's oversold, so maybe, maybe it's time to buy now. Maybe this is the point because they don't want to miss a rally, and I understand that. And or they're looking at the MACD, and down here you can see we've fallen, we were way up here, and now we're way down here. We could potentially reverse here. They're looking at let's see, what else could they be considering? They could look at the RSI. It was way up here above the 70 line, telling you it was overbought, and now it's pulled back down. And it's coming near the 30 line, so maybe, they're trying to look at that. Look, bottom line for you, if price and volume is not telling you there's a bottom here, ignore everything else. Don't even go on to the third and fourth indicators, okay? That's how you play that game. Uh, right now, the market's telling you there's no bottom here. Why is it telling you that? You need to know that, okay? I'll show you that in a minute. But for now, that's a no-no. Don't try and call a bottom right here. There isn't one. Um, from a fundamental perspective, okay, trying to call a bottom here based on fundamentals would be the equivalent of you trying to purchase my house based on price alone. If I tell you my home is worth $300,000, do you want it? And then I do not tell you the condition of the home, the square footage of the home, or the location of the home, and you bought it, that'd be stupid, and none of you would do that. If some of you would, please send me an email and I'll sell you my house. But yeah, seriously, you wouldn't do that. And trying to buy the market now just because you were trading up here and now you're trading down here, that's the equivalent of what I just described. It's really stupid because the fundamentals are still unfolding. We know about the European debt crisis, but it's not the end of the story. We're still hearing the details. 2 weeks ago, we knew about the pigs, Piigs. Now they've thrown in a silent H for hungry. Okay, that just came out. So uh, this problem is spreading. This problem is still developing, and they haven't even begun to stop it, to resolve it yet. So, yeah, there's the market when it's showing you right now there's no bottom here. It has a good reason to do that. Let's look back at history. The last time that we've seen a fundamental debt problem like we have today. This is the last time that we saw a global debt issue. It was the 1929 crash that started in the U.S. Stock markets, we fell about 50%, recovered, big old bounce right there. A lot of people back then could have said this is a V-shaped recovery, and in fact, all the prognosticators, or whatever you want to call them, of that time thought, hey, yeah, this is it. This is the bottom. We have the nice recovery going on here, and this happened all the way into 1930s April, and we started to roll over here. We still had high unemployment at this point, but the reason why we fell at this point, started going lower, was because of the Europe debt problem at that time, and it started with the default of debt by Germany, I believe it was. And that's a problem because fundamentally speaking, it looks an awful lot like our current situation. This is our long-term chart of the Dow Jones Industrial Average. Each one of these candlesticks is 1 week, and this is a 4-year chart. You'll notice this 2008, 2007-8 sell-off looks an awful lot like the 1929 crash. Fell about 50% before you had a big bounce, and everybody at that time, as well as this time, believed that we had a V-shaped recovery and it was over, and now we're rolling over in April because of a crisis in Europe, and we have defaults on the table. Okay, there's your reason right there why the market's telling you there's no bottom here. You're just getting started. You should be shorting into this sell-off, plain and simple. In my opinion, that's what I would do. That's what I am doing, and that's what I'm recommending. And that's why your markets are not showing you a technical signal of a bottom. There isn't one here. So that's my case. You're going to have bounces along the way, just like you did back in the 1930 crash, but until the fundamentals are resolved, you have nowhere to go but lower. And that's the case we're looking at here, and it's something you definitely need to be telling your friends about. There's a whole bunch of people out there with 401ks, everything else that I believe are in jeopardy, and that's not going to be good. Also, if we look at the 1930s debt crisis, back in this initial sell-off down here, when you fell about 50% before the bounce, you had some little bitty credit issues, along the way. This felt like a lot back then, but the real banking crisis happened here, about halfway. Okay, that's where you started getting banks just going under, lots of them, bank holidays, all kinds of problems there because credit just dried up. Okay, that's going to happen again, in my opinion. That's what we're seeing fundamentally set up. That's what we're seeing technically set up, and yeah, calling a bottom here is, I think, a missed opportunity, as you could be shorting the move lower, and you have to face up to the facts. We look again at the short-term markets for the Dow Jones. You can see they're not showing you a bottom. Let's look at that real quick. There you have it. No bottom. Okay, and you're making a new low as far as the close is concerned. I'd stay short 100%. If you've not been to our free website at perfectstockalert.com, like I said, it's 100% free. All we ask in return is you refer a friend. Tell somebody, anybody, to go check out perfectstockalert.com. The guy's absolutely insane, but he's 100% right. They're making tons of money over there, and you don't want to miss it. God bless. Let's have a look at the disclaimer. The disclaimer. You can read. Enjoy the evening. Stay short. And let's go make some money.